Hey there, it's Ken Majmudar here, and in this video, I'm going to share with you 7 profitable tips for taking advantage of recession. So these are investment tips for those of you that are looking for opportunities coming out of this recession. So how do we take advantage of recessionary times as investors? So my number one tip is invest in companies with strong balance sheets. Now, obviously, I'm making the assumption here that you're investing in individual companies instead of investing in the market as a whole, which I'll address a little bit later. But the great thing about recessions is that they actually create opportunities if you are prepared and have the patience and the courage to think long term. So the good thing is that if you find companies with good balance sheets, so balance sheets means the assets and the liabilities of companies. Some companies borrow a lot of debt, whereas a lot of companies also have very conservative balance sheets. So what you want is companies with strong and conservative balance sheets. That would be looking for companies that have a lot of cash, don't have a lot of debt, maybe little or no debt. And what you usually find is that balance sheet strength helps these companies to weather recessionary times. So look for and invest in companies with strong balance sheets. My number two tip is to look for and invest in defensive companies. This is using a sports analogy, but obviously some companies play great offense. They're growth type companies. They do well during good times. But there's another category of companies. These are called defensive companies or defensive stocks. These are companies that tend to do very well and hold up very well, even in bad times. So obviously, these would be companies that are providing essential products or services. So you'll typically find these kinds of defensive companies in areas such as healthcare, utilities, food and beverages, right? Because and even rental properties. So people always need the basics. They need housing, they need food, they need healthcare, they need utilities and electricity. So these are called non-discretionary or defensive companies, and these are the companies that you want to look for during a recession. Interestingly enough, even though these companies are much less subject to the economic downturn that is what a recession is, nevertheless, when the stock market is falling and there's pessimism due to recession, these companies' stocks also fall. And so if you are a long-term investor, you can take advantage of this pessimism by looking for and buying defensive stocks. Another area that I really like for investments during a recession is real estate. Now, right now, in this particular recession, what happened was there was a lot of inflation that happened. The Federal Reserve wanted to slow the economy down because during the pandemic, there was a lot of attempts to print money and really keep the economy going. And so what this has done is the real estate has really slowed down. Interest rates are high, so prices are going to adjust. And so taking advantage of this downturn in real estate is a great idea as another area. Now, obviously, with interest rates higher, property values have started to adjust. So the good thing is if you're able to find a good opportunity in your area, I like multifamily housing. We do a lot of multifamily housing investments at my firm. This is a great time when you can buy good multifamily housing investments less than you could have. And if you have the right ability to finance it, hold it, do what's called a value add, where you can improve the property and increase the rents over time, then when things stabilize and interest rates maybe start going down again, that cash flow that you're getting from your multifamily property is actually going to make that property much more valuable down the road. So my next tip on areas to invest to take advantage of the recession is to consider investing in government bonds. And why do I say this? Well, for the longest time, we were in an environment where interest rates were really low and you couldn't get anything worthwhile. Well, what's great now is that because the Federal Reserve has been increasing interest rates and basically trying to slow down the economy deliberately in order to slow down inflation, there are now finally, for the first time in a long time, as an investor, you can buy bonds. Two areas that I like are government bonds and corporate bonds, but even mortgage-backed securities. So these are all areas where the money that you invest now, instead of earning 1 or 2% like you would have about a year ago, you can now legitimately earn 4, 5, 6% on your money, which is much more attractive than it used to be. And so you can really generate some worthwhile passive income in government bonds. Now, As an investment advisor, I do buy individual bonds after we do research, but you can buy the individual government bonds, or you can buy funds, ETFs and funds that buy these type of bonds. But either way, you can use these recessionary and pessimistic times to establish investments in great bonds and great fixed income opportunities that will generate great interest payments for you. Another area that I really like is obviously to invest in good stocks. This could be, I already mentioned defensive stocks. If you want to be a little more offensive about it and have a long-term horizon, I would look to invest in very well-established growing companies. These tend to be even cheaper during a recession. Now, defensive stocks do go down, but they hold up better. And so there's a lot of companies that are trading at 50% of the price, sometimes more of a decline from just about a year ago. And so taking advantage of some of these declines in really well-known companies could be another opportunity. So think companies like Google, Amazon, Facebook, but obviously there's many companies that are much smaller that you may not have heard of that could grow quite a bit. Now, this does require you to do research and to know what you're investing in. So that's very important. My next tip on profiting from recessions through investments, and this could even be my first tip, but it's really to be cautious and avoid making rash decisions. One thing you see as a professional advisor every single time is people do rash things. They get scared by the markets, they get emotional, and then they end up making mistakes that turn out in the fullness of time. They would have been much better off of doing little or nothing and letting the market recover. So even though a recession can be stressful and an uncertain time, it's important to avoid making hasty decisions based on fear and emotion. So take the time, no matter what you do, always to research carefully and consider all options before making any moves, whether investment moves or financial moves, or even life moves, to be honest. My last tip is to keep a long-term perspective. So, of course, remember, most importantly, that a recession is typically a short-term event. Usually recessions last around 18 months. So the typical recession is 12 to 24 months. That's most recessions. So keep perspective, because in 2 years, we'll probably be coming out of a recession. And so the moves you make during a recession, those moves actually end up planting the seeds to profit greatly as long as you maintain a long-term perspective on and when making investment decisions. And obviously during a recession, while some investments, perhaps investments you made prior to a recession, may do bad in the short term, as long as your basis for making those investments was sound and logical, and if that logic and soundness holds up, then there's no reason why you can't continue to make very good returns in the long run. And so you have to have the patience and the discipline and the knowledge to look past the recession and to the good times that usually follow recessions to set yourself up to profit. Hope this video was helpful. Hope you enjoyed it. And please check out some of my other videos for additional tips in the areas of investing, finance, personal growth, and personal success. Thank you.